Hello and welcome back, everyone, to another Friday Night Market Conversations. Thanks to all of you that are tuning in, whether it be from YouTube, Periscope, or, of course, Facebook. I already see we got some folks have tuned in. Scorpio, nice to have you in the house. Heirloom and Heritage. Pete Kelly, nice to see you. You know, folks, tonight I think is going to be a really fun show for two reasons. One, you know, with this recent downturn, it's created some turbulence. I've gotten a tremendous amount of, whether they be direct messages on Twitter or private messages on Facebook, and even a lot of the folks that are in my private Patreon group have reached out and it's like, what's going on, Jerry? Well, here's the truth, folks. What's going on is called volatility. And you have to remember, you cannot have the kind of just mind-blowing potential gains without having a downside risk associated with that. Those of us that have been in crypto for a long time, and especially those of us who have lived through January 2018 through, let's say, April 2020, are well accustomed to having the skin flayed off our backs. Corrections and down cycles are part of the game. But at the end of the day, right, as an investor, and it doesn't matter if we're talking about stocks or bonds, real estate, commodities, and especially crypto, to be able to look at something and say there's 100x potential return on my investment with a downside of only the capital that I put in it, well, that is an amazing risk-adjusted return. Where else are you going to find that? I can tell you it's not in real estate. It's not in commodities. It's definitely not in fixed income bonds, right? And very rare to find that unicorn in the equity markets where you get this kind of asymmetric setup. So for those of you that are new to crypto, right, you've just come in kind of maybe in the last year, and you might be even upside down in your investment, it's all temporary. If you've made a thesis and your investment was based on the fact that you see this as a multi-year growth industry, then welcome to the growing pains of being an investor. One of the things we can constantly do, good market, bad market, uncertainty, all that stuff, is we can continue to learn. Put on that student hat. Grab a book of something that you want to learn and learn it. The best investment any of us will ever make is in our own education. With that being said, as I was browsing my YouTube recommendation list, this wonderful young man popped on my screen and presented to me this incredible video called Who's Michael Saylor? And as somebody who has followed Michael Saylor's public talks in interviews and things of that nature, I found him to be a very interesting human being, right? I love the mind of engineers and how they look and see and talk about the things they're interested in. And Julian, who we're going to bring up from Kinetic Finance, did a really wonderful video. And after I saw that video, I said, I want to reach out to this guy. I want to talk to him. I want to see if I can get him on the show. Well, he agreed. He's backstage, and we're about to bring him on now. Right before I do, though, I want to make sure I say hello to DC Precise and Ray and even Nick Black, my mentor extraordinaire. Tony, nice to have you in the house. John Vinsky, my producer Brady's chiming in, saying hello to everybody. And of course, a Friday Night Market Conversations would not be complete without Bill Gould. Bill Gould, thanks for tuning in. All right, so let me introduce you guys, everybody, to Julian from Kinetic Finance. How are you doing tonight, Julian?
Hey, Jerry. Good to hear from you. Thanks for all the kind words. Appreciate it.
Well, you know, I'll tell you what. One of the things that I found really, really interesting with your show is that, one, it was a very well-produced show. And the way that you delivered your content told me it was very clear that you put a lot of time and energy into crafting a message that you felt was worth delivering. And so for those that aren't familiar with Julian's channel, obviously it's Kinetic Finance on YouTube. I strongly suggest you go check it out. But let's kind of start at the beginning. Julian, what got you interested in investing? Because I know for a fact, because you're close to my age, you were not educated in finance and economy and how to have money earn money for you if you came up through the public school system like I did.
I did.
So tell me what got you interested in investing, and more specifically cryptocurrencies and things of that nature.
All right. Where do we start? So I am kind of like a creative filmmaker at heart. I do everything from camera work to editing, lighting, all that stuff, which is sort of why my videos, I try to kind of make it as cinematic as possible. But how I got into investing was basically back in 2016. I was just graduating university from a film production degree. And when you graduate here in Canada, you kind of have two routes. You can either go into the union, which is more like you kind of work your way up the ladder, spend 5-10 years doing that, or you can try and be a bit of an independent filmmaker, work on commercials and things like that too. And so I kind of wanted to do more of the independent route and have more control over my own destiny. And I stumbled upon my first major investment in the space was Ethereum. And I'm trying to find out how I got into that. But I think basically it came from back in like 2013, I bought like $20 of Bitcoin to buy some now legal drugs, marijuana online. And every now and then I just check the price because like, oh, okay, I bought this asset to go buy drugs, but it's going up, a lot of money. And then I stumbled upon Ethereum as kind of the secondary currency. And it sounded really interesting because it was all about taking the technology of Bitcoin and adding this other layer of smart technology and contracts to it, and being able to do all these things without permission and having it all run autonomously. It just sounded like, a no-brainer of like where the future is going. And I basically dumped the rest of my remainder amount of student loans in there at the end of my semester, and the rest is history. Did well with Ethereum, got in, I think, at like $8 US, and then rode that wave up, took money from that, put it into stocks, learned more about stocks and that investing world, but all this stuff self-taught. I didn't learn anything, investing wise from traditional education. And I've gotten so enamored with it. I took a lot of that money. I started my own production company, and that's kind of turned out successful, generating cash and stuff. And the big wake up call for me, and the reason that I'm doing a lot more YouTube stuff, this year especially, is I saw, very similar to how Michael Saylor did in 2020, that my cash was losing purchasing power. And I have a video production business, decent margins, but when you have cash in the video production business, you either hire more people, you take on more projects, or you buy more gear, and there's no point in doing that unless you just like to have a lot of fancy cameras. But I couldn't really figure out how to scale my business, and it was just, I was getting all this cash and I didn't really know, what do I do with it all? And I decided, well, I'll put a little bit into Bitcoin, and that was kind of back in May, and I started investing my own balance sheet into it. And then I heard Michael Saylor get into it, and his thesis was like everything that I've ever thought about the asset, but just explained so succinctly. And he did his first purchase in August, and he just kept coming out interview after interview. And just, if you've listened to him for more than a few minutes, he's so compelling. Like, he's extremely, extremely compelling in the way that he speaks, and he breaks things down with amazing analogies. And I always thought, well, it'd be interesting to see like his background and, diving into that with micro strategy and all that. That's kind of the whole video, is figuring out like, how did he come to this? Because I came to it from film production. He came to it from engineering and this software perspective. It's like, it feels at the end of the day, everyone's journeys kind of converge in the Bitcoin space. You have all these different people, and they have different mindsets about the world, and their backgrounds are completely different, but they all come and they unite over this like realization that it's kind of this apex asset. And so I'm a bit of a creative guy. I'm not an engineer. I'm not, a macroeconomist, but I feel like I got Bitcoin and I understand it, and I've kind of committed my, existence and a lot of my capital to, explaining it to other people and seeing it work out. But yeah.
I'll tell you, I'll be honest, I got enamored with Michael Saylor, mainly because there was already existing confirmations, right? It was like had I not known who he was, one could say it's just really eloquent salesmanship. But when you look back and you consider the mobile wave, and you read the mobile wave, and you see when he wrote that book in 2011, how that thesis and how he saw what was going to happen. It was like, from an engineer, it was very logical and rational, the rollout of what he's called the mobile wave. The mobile wave is nothing more than things that were physical in the physical world being transmuted through technology into digital formats, and the dematerialization of all these industries compressing down to electrons.
Yeah.
That could be easily accessible on an application on your phone. And it all played out exactly like he laid it out. Years after he did it, after he wrote that, it played out exactly that way. And to me, that went, well, if he's talking about Bitcoin now in this way, coming from where he came from and having done what he already did, I got to give the guy some credit, a huge amount of credit. And there's a tremendous amount of rationality and logic to how he described it. So he's somebody that I listen to. There are probably 5 or 6 people that have voices that I listen to. Raoul Pal, Michael Saylor, Nick Black, Jeff Snyder. There are people who understand things and are willing to communicate them for my consumption for free.
I know. That's what's so amazing about all of this.
You know what I mean?
Yeah.
So it's really cool. One of the things that it was kind of interesting, you're talking about marijuana. My first success as an investor, because I came to investing very late in my life, was cannabis stocks from Canada.
Same here. That was when I made a little bit of money on Ethereum, I was like, okay, I'm going to split it 50-50 between this and marijuana stocks. Should have never done that. But I'm curious what you have to say about that whole space, because
I'm not in that space anymore.
Yeah.
But I did make 10x, actually 11x on my Aurora cannabis stock. And I was in that for 18 months max.
Did you sell before it was legalized?
I sold, no, well, it was legal in Canada.
When you bought it? Or?
Well, I bought Aurora cannabis at like $1.20 a share and sold the majority of my holdings between $11.50 and $11.95.
See, that whole story is a mess because they split the stock. The all-time high now is like 150, right? I mean, you want to talk about destroying value. Like, that company is just creme de la creme. I'll tell you, that leads me to the next thing. One of the biggest lessons I learned about investing in companies through common stock was, number one, as a common stock owner, I was meaningless to the company. Totally.
They don't give a flying F about me. And when a company, especially now, this is specific to the marijuana industry, doesn't have the same access to traditional capital that some other companies would have, their only recourse for generating capital is the issuance of more stock.
They ring the register. But I mean, the problem with Aurora is that they never had a plan to ever stop doing that. And they haven't. Like, the share count, I did a video on psychedelics and I was saying, like, you're going to run into the same problem because these things aren't legal. The only way they can get capital is to dilute and raise money on Wall Street.
Issue more share. Exactly.
Aurora Cannabis, in like the last 3 years, they've 10x'd their share count, and that's not including the split. They've diluted 10x. There's billions of shares out there. There's so many they have to go back and they have to re-split all of it again just so that it can stay listed. It's a nightmare. But
again, I had found them prior to digital assets like Bitcoin, XRP, Ethereum, Cardano, blah, blah, blah. And that single element about a limited supply, the code caps the quantity, to me was so attractive. Having lived through my share count debasement with Ethereum. I mean, with Aurora.
Yeah.
With Aurora Cannabis. And so when I got out, so what I had done is I had cut the position in half, come to Costa Rica, got some dental work done, and got my eye surgery that I really wanted done. And then when I came back, it was on a run. So my position had doubled again. And then I just completely sold out at the time it was the top.
Nice.
I sold out. And so that was like February of 2018. And it just, all that money that came from there went into digital assets. Aloha, Kathleen. I used to live on the big island of Hawaii.
Oh, cool.
It was a lot of fun. So when let me ask you this. How much are you still in traditional markets, i.e., whether it be your Toronto Stock Exchange up there or OTC stuff? What do you?
I think about my allocations all the time, and it's so hard to keep track of, like, percentage-wise, because the crypto thing is so volatile. It's just like, how much do I have in crypto percentage-wise of my assets? I'd say I'm probably about 15% still in stocks and traditional assets. Maxed out tax-free savings account here in Canada, but I have I keep mostly a cash account. I don't have much in the retirement. But yeah, this year worked out pretty well because of the whole GameStop thing. I got in on that one kind of early and rode that a bit. But yeah, lately though, like, I haven't touched traditional markets probably for the last 2 months. There hasn't been anything too compelling. Tech is kind of, that trade is fading, and then the reopening trade is coming back, but the market's just kind of like flatlining because tech is going nowhere. It's such a large percentage of the indices. Banks are starting to do a little okay. Biotech's coming back, but it's like not many opportunities there. I haven't found recently.
Well, I have a biotech play. So I'm still I have a Schwab account. I have an IRA with them, and I also have a small personal set of holdings, and I have an account for each of my children. My children's holdings are all REIT related. So they're all relatively decently paid dividends in the medical industry and the telecom industry. So one of them it's called Unit, and it only buys property that they will lease either their fiber optic network or their cell tower network to the big telecom companies. That's a steady producer. I don't see telecom going away. The other REITs are in medical. So they're only land that hospitals are built on. Mm-hmm. Hospitals are generally pretty good customers.
Yeah. Yeah.
They will continue to pay their rent. Now, those REITs are in my kids' funds because they pay really decent dividends, 6.5%, 8% on average. And they're compounding in their accounts. So they're just going to sit there and grow, let alone regardless of anything going on. And I have a bio play, right? I have a medical play on a company called PMCB, Pharmacyte Pharmaceuticals. And they have a cancer treatment in a cell that they inject directly into the cancer. It's like chemotherapy, but direct to the cancer.
Oh, wow.
It's not systemic or holistic in the whole body. That bought it 2 cents a share, threw $300 at it, got myself 10,000 shares, did that same thing for each of the kids. After that, it's all crypto. And it's all crypto that earns yield. If I can't earn a yield on an asset, I don't buy it.
That's an interesting approach. So I was going to get to that. Like, how do you feel comfortable with the yield that you get on these assets? Because there's the DeFi versions where you're lending them out on the decentralized platforms and they have their liquidation protocols and all that. But then there's the centralized platforms where they just roughly tell you, oh yeah, we're lending it out to market makers. And you kind of have to take their word for it, like BlockFi, right? Like, how do you feel about the safety of your assets when you're kind of lending them out?
Well, the first thing I do is I understand that so I understand what risk-free is, and that is my asset on a cold ledger wallet or a Tezos or some cold offline wallet. Then I assign risk to everything away from that. Mm-hmm. So if I got it sitting on Coinbase, that's a risk. beyond holding it, so I got risk-free, which is the ledger. And then you go out the risk curve, and depending upon what I'm receiving in return for that risk, is it appropriate or not appropriate? I feel I'm being compensated adequately for the risk that I'm taking, having a Nexo hold the keys to my coins.
Yeah.
Not to mention this thing I've worked out, because unlike I'm not a successful video production company with a cash flow, I'm a retired guy in Costa Rica with no cash flow. I've leveraged assets to take loans to strategically get more assets that I could put back on the platform that I took a loan from. Okay.
So that's important for you. So what percentage would you say do you have in these yield bearing accounts versus like just
100%?
Okay.
100%.
Interesting.
Yeah.
I did a whole video on BlockFi, and I was trying to, like, one of the questions that people had about that was like, how much do you put in these platforms? And for me, it was like, well, you dabble in it, you build that trust up, and then it's kind of based on how you feel. But I say, like, I don't think you can go wrong with 10%. But 100% is interesting. So you're with Nexo. Is there a reason why that one in particular?
I have a BlockFi account, I have a Celcius account, and I have a Nexo account. But Nexo, by far and away, has the largest percentage relative to those other two entities in the space.
Yeah, BlockFi's blown it lately, because it's like it's like, oh, you get 6% interest on your Bitcoin if you have half a Bitcoin. It's like, what?
Yeah, I have under half a Bitcoin on BlockFi.
I have to keep taking Bitcoin out of there because I used to have I don't know if I should reveal how much, but enough that like I have to keep taking it off and moving it to these other platforms like Celcius, because it's like, I'm not going to store it with someone to get 2%. Forget it. Like, I might as well just keep it cold wallet,
Well, okay. I understand their business model.
Mm-hmm.
And I'll be honest, I would rather have a company do what BlockFi is doing if they can stay in business for 10 years than to do something like what Bitrue is doing, which to me, they could crumble tomorrow.
So what is Bitrue?
Oh, it's a Singapore exchange.
Mm-hmm.
It's an exchange in Singapore that has this whole power piggy program. You park your assets on their platform and roll it in this program, and you earn like-kind interest on your assets.
So it's like significantly higher rates than Nexo Celcius, or?
No, but they do offer rates on things that you won't find on Nexo, Celcius, or BlockFi.
Oh, okay.
Or Abra, or Voyager, or any of the others. Like VET. VET's a project I really like. VET.
That's VeChain, right?
Yeah, I like VeChain. And they'll give me 4.3% on VeChain. Not to mention all the VThor that the VeChain I hold generates comes back to me.
Have you ever played with the DEXs like PancakeSwap? Those are pretty crazy.
I don't like playing with anything that is going to charge me 25, 50, 75% of what I'm dealing with just in gas fees.
So PancakeSwap uses Binance Smart Chain, and the gas fees are nothing. And that's why, like, if you look at the price of BNB, that's why it went from like $6 to 600, is because all of a sudden people were like, I want to use all these DEX features. I hate the Ethereum fees. They built this platform on Binance. The price of Binance went up 10x in a week because basically everyone said, okay, forget Ethereum. We're going to just try it on Binance. It's interesting. I mean, you got to look into that stuff further. I was going to do a whole video breaking it down, but they have these liquidity pools. So if you own two different assets, you can basically make a liquidity pool from the assets, and then you can stake them. And some of the some of the yields are like 150% a year. And I'm trying to figure out like where the fault lies, because whenever you have an interest, whenever you have rates like that, there's got to be some crazy high risk to it. It's all decentralized.
Most of the time, and it's just a copy of what they did on Ethereum. What you're getting is a made up asset.
Yeah.
That most likely is illiquid. Right?
Yeah. Like, you're getting an LP, right?
Try to take that 109% of, pancake syrup coin and sell it. Good luck.
No, but like that, you can make these liquidity pools with just two things. So you need to have both the assets. So I can make a liquidity pool for, let's just say, BNB and USDT, And the liquidity pool for that will still pay out 30, 40% APY. The thing I need to get, I need to
pay you in what?
It pays
What
you
will it pay
in,
you
it pays you in USD or it pays you in BNB. So one of
And
the
where
assets.
does that come from?
Where does that come from?
Mhm.
That's what I'm trying to figure out. I've been doing a bunch of research on this stuff and I'm trying to figure out like, where's the risk? Because this return is insane. It's something to do with, it's almost like you're getting the fees when people use the DEXs to exchange, something like that. I gotta get to the bottom of it.
So
I know there's a whole bunch of people that use these things. I have no clue how they work.
My hesitation.
Yeah.
The Ethereum stuff was very expensive. So obviously I decided to not participate. I knew that, like, for instance, of all these layer one protocols, I'm a big fan of the Cardano project. I'm a big fan of what they're doing. I know all those things are going to come to that platform. I will most likely wait to deal with DEXs and things of that nature until it comes to Cardano.
Yeah.
You know, there are elements of the Binance that, to me, you know, I listen to people who are smarter than I. Some of them are saying, hey, this, you know, is kind of sleazy and it's sketchy and it's not well defined and these numbers don't make sense. And when things don't make sense, I tend to not give them a lot of it, you know, of my brain power. My bandwidth is kind of limited. So, you know, my focus is every day I'm trying to become a better investor today than I was yesterday. And a lot of times that transcends crypto. I'm, you know, looking at the global economy. I'm looking at the ramifications of this country taking the US dollar as its currency because it's blown out its own. This, that, and the other, debt markets, things way outside of crypto. You know what I mean? Because I placed my bets. My bets are already placed in crypto, and it's not like I have money coming in to convert to further those bets. If you understand what I'm saying?
Yeah, for sure. I think one of the things that really interests me about crypto is one of the things when I got in and I realized was such a problem for people was figuring out how to actually operate all these things like wallets and this and that. Like I was back in 2016 when Ethereum was like $8-10. I was telling my friends like, let's get in on this. Like you should put some money into it. And everyone was like, forget it. That was before MetaMask. That was before any of these things. And fast forward to 2021, I'm seeing people who like have nothing to do with the finance space and they're able to work MetaMask and DEXs and stuff, and they've like never had any experience with crypto and they're buying NFTs and all this stuff. And it's like, what happened to this barrier of entry? I guess all of these new platforms are so friendly and accessible. And so it really changed my investing thesis of like, people don't really care how complicated getting into these investments are. If they believe it, they'll do the work and figure it out. Like one of them, and I think it's a total scam, is SafeMoon. But like the barrier to entry to actually get into SafeMoon, if you got to be like decently tech savvy to go on a pancake swap or go on a Binance, buy Binance chain coin, convert it to BSC, and then go on to pancake swap, enter the order and do it correctly without causing a bunch of slippage, and then finding liquidity for that. It's like, it's so complicated, but people seem to be getting over it. And it just makes me think like, you know, we're in the first inning. There's going to be so many more complex financial products that come out of crypto. And I used to think, oh, the more complex it is, like the less likely it is to take off. But I think that's totally not the case anymore. And that brings me to like Cardano. That was one of the ones too, where, you know, they're working on their version of smart contracts. They're putting a lot of new features into it and they're taking all this time. And the reason that I avoided Cardano back in 2017 was I just saw like, I didn't see much progress. And then I missed it this year too, because it's like Cardano smart contracts coming soon. It's been 3 years. It's like Ethereum 2.0 coming soon. It's been 3 years, but you know, I've missed the forest for the trees on some of those because I've seen like, you know, these things take forever to play out, but really like, it doesn't matter. Like price action rules all, right?
Really? See, I've taken a different approach. I've taken an approach of looking at teams, the product, their roadmap, what they say they're trying to do, right? And match it to what they're doing. Yeah. And I have found there are several entities, like I really like Quant.
Quant Stamp?
Just quant networks.
Oh,
They're
okay.
they're an interoperability play. Again, not a barn burner from a price action standpoint, but the token economics are wonderful, and they're delivering on what they said. They are living their roadmap. Cardano is exactly the same. Great management team, right? You know, anybody that follows Cardano is tuned into Charles Hoskinson, and you know, they're on board. I like who they're attracting. Projects like SingularityNet. I'm a big fan of AI. I think AI is going to play a major role in the development of a lot of what you just said, complex financial instruments. I think a lot of them are going to be built using a lot of open source AI.
Yeah.
And
No,
so
I-
where does
yeah,
it come
for sure.
from? Does it come from Fetch AI? Does it come from SingularityNet? Does it come from maybe one of the other lesser known AI plays? I don't know.
Yeah, I mean, I still to this day, I'll be honest, I couldn't pitch anyone what Chainlink is. I don't. Is it Chainlink or LinkChain? I always get it confused.
Chainlink, it's an Oracle. Briefly stated, oracles bring information from outside the blockchain to the blockchain.
Right. So it take it differently. So I still have trouble wrapping my head around like why does that need a coin? Like why can't that just be like a function?
It doesn't need a coin, and you're going to see every native blockchain will have its own native Oracle system.
Yeah.
So why does Chainlink exist?
Yeah. Well, that's
Because
the hardest
Ethereum
part about
didn't build one.
cryptocurrencies is like, what do they serve utility? If they're not equity in something, they serve utility. It's like, why do I need to own this coin instead of just owning Ethereum? And that's why I stick with like the top 20, top 30 for the most part, because they are bigger level chains and they're going to have these functions. But getting a token that exists on a chain to do a specific task, I don't know where the future of those things are going. I remember like Gollum. Do you remember Gollum?
I remember Gollum.
It used to be a big thing. They had a huge ad campaign, and I don't think Gollum's anywhere today because it's like, okay, you can use it to buy, rendering power for 3D tasks. And it's just like, why would you want to? Okay, so it's decentralized. No one has adopted it. It's just like, if I want to get that job done, I go to AWS or I can go to Azure and get it done. It's just like, why do I need Gollum? And they failed to justify, that project.
Well,
So,
but here's the thing. And we're going to see this play out time and time again. Does a centralized version of something create more user value than a decentralized version of something?
yeah. And do you need to decentralize everything, or is it not that important, right?
Exactly. Those questions will be answered by the market over time. I've got a couple things coming in from the audience. One of my incredible patrons, Tony, BlockFi have recently lowered their percentage yields. Do you see a trend or domino effect coming, and why these platforms decided to pay a lesser yield? Two reasons, Tony. Yes, we're going to see that trend, because in order for a business to be sustainable, it has to have a profitability. If there is not a market on the other side willing to pay the rates to borrow these assets, then there isn't the ability for the company that is doing the service to pay those yields. And you're going to see BlockFi and Celcius and Nexo continue to bring their rates down.
Yeah, and also when you're talking about lending out assets, right? The rate is determined by how many people want to borrow that asset. And so people are only borrowing Bitcoin and Ethereum and all these things because they want to short it for the most part. You're lending out your asset to people who are shorting the market. And in bull markets, there's not much, rate for shorting those assets. One of the things that I don't quite understand about BlockFi though is bear and bull market, the USDT rates have remained the same at like 10, 11%. And sometimes I think like, God damn, I can get a line of credit from my bank, 6% a year. I can convert it to USDT, get 12% on BlockFi. Why doesn't everyone do that? Like,
And just play that arbitrage.
That's a huge arbitrage, right? Like, I don't understand. And it's at this point, like, you got to think like if they haven't lowered the rates for US dollars, bear or bull market, when are they going to ever? Right? I don't know.
Well, here's the thing. I look at the old school mechanisms, right? The fixed market industry.
Yeah.
Quality, pristine bonds pay no yield. Now you can get a return in a higher price for the bond. So if you bought the bond for 100, you can probably sell it for 120. That's a yield. But I'm talking about if you took it through its maturation. There's no yields in bonds anymore. You got to go way outside the yield curve. You got to go out into junk bonds. And my buddy Nick talks about this a lot. Case in point, the junk bond market, which is the riskiest bonds there are, let's say 5% on average. 5%, which is high in bond yield, by the way. 5% for a junk bond, 5% return on a bond from a company that has a 50% chance of going bankrupt.
Yeah.
And
Well, I feel like there's no place, like what you just said, like I don't feel like there's a place for junk bonds in the future if you can get returns on just cash. Like as long as you trust these companies.
How long it plays out. This market is very small.
Yeah.
Right?
Well, we'll see. There has to be a lot more. Yeah, there's something missing here. I think
there is no way that the crypto market, if it was, let's say it garnered just even the size of gold. Let's say we got to 10 trillion. Do you think at 10 trillion, it could continue to do what it's doing now, paying 10% on USDT?
No, and I think when it gets to 10 trillion too, like the volatility will disappear as well.
It'll tamp down.
It'll tamp down quite a bit, at least in Bitcoin, right?
Yeah, I think everything's relative to the asset itself, right?
Yeah.
But one of the, like, again, back to like how I opened the show. Tell me anything, any investable entity, product, commodity, it doesn't matter, service even for that matter, that has the kind of upside that these digital asset networks do with, basically the downside is zero. You go to zero, you lose your money.
Yeah.
But if your total investment is $100 and you can only lose 100, but you can make 1,000, that is a risk to reward ratio you cannot find anywhere. It's not available.
No.
But yet it is here. And people need to understand that. Yes, the crypto market is going to go through all kinds of gyrations until it matures. If you can't stomach it, get out. You should not have your emotional or spiritual life be ruined because you can't handle the swings of an infant market growing up. I tell that to people all the time.
Yeah, I mean, some of these things are easier said than done, but I think like for me this cycle, I have not cared about the swings in price. I have an account where I trade it and I have my no touch cold storage stuff. But for me, it was now that I have a business that has cash flow and I can pay myself, it's just like whatever I don't need for myself, it goes into crypto and I don't think twice about it. I don't care if I'm buying at 60K or 40K or 30K because I think the end game is far higher than those figures at any rate. And so if it drops 50%, great. As long as I have cash coming in every month, I put a little bit more into it, right? When it was 2017, that wasn't the case. It was like I took all my money. It was like $4,000. I got Ethereum. By the way, funny story about that. I bought it around, actually, I think it was 13 Canadian. So that would have been about maybe $10 US when I got into it. The day that I bought, I think 2 days later was the Dow hack. I don't know if you remember that. And it dropped 50%. And I was like, okay, my 4,000 just went to 2,000. But I realized, like, okay, well, there's no point in selling because I want to make 2,000. Like I have the rest of my life to make $2,000. Might as well just like forget about it. And if it goes to zero, whatever, I wasted some money. The hardest part is like when it goes up, you want to take profit because you have some shiny object you want to buy or something like that. But no, I think the name of the game for crypto, if you can, is like get a source of cash flow coming in and then just don't worry about the crypto. You really can't think about it. You can't rely on it. It shouldn't be like an REIT or an investment that you depend upon, right? And then I also think it's time preference. Like the younger you are, the really like the less you should worry about it, right? You have all the time in the world, 12 years, Bitcoin became $1 trillion asset. Who knows where it goes from here? I think the story I read the other day was like Apple took 30 years to become $1 trillion company, and then 2 years to become a $2 trillion company. Like that's where things are moving. And people think, Bitcoin, 12 years to become 1 trillion. Is it really out of the possibility that it becomes 2 trillion in the next 6 months, 12 months, and then how quick to 10 trillion, right? Like, just the way that money is expanding, like, you know, people look at these targets, they're like, oh, you're moon baby or whatever, but it's like 10 trillion is not going to be like as much money as you think it is 10 years from now. And you know, even 1 trillion was crazy like 10 years ago, 1 trillion for anything. And now it's just like, oh yeah, Google, Amazon, Apple, Microsoft, yeah, $1 billion companies, whatever. Facebook's coming up next. Tesla almost hit it, and Tesla least deserving out of all of them, in my opinion.
Let's okay, I'm gonna let you go on, but we're gonna circle back to that.
Okay. I don't hate Tesla, but it's like, you know, compare Tesla to those giants in terms of like what they're producing and the impact that they're having.
Let's talk about, what do you think Tesla is? Tell me what you think. What is Tesla?
Tesla is an energy company. I think they create things that store energy, and they create things that create energy. Right. So the value in Tesla, I think, is in the batteries. I don't think it's in the cars. There's also a data element to it too. They're going to be far and away the most advanced in terms of collecting autonomous driving data and all that stuff. That's great. You know, I don't know how to value companies appropriately, but I think you've already seen that like the market has discounted Tesla. Like the love affair is over with it. They were forced to buy it when it uplisted the S&P 500. It hit 900. It's lost half its value in like 4 months, and, you know, might go up again and do its thing. But I don't know. I like it, but it's like, if you look at all the companies that are 800 billion plus, I think it's the most ahead of itself when it was there.
Well, there's no doubt. There's no doubt that what the market is valuing at is not a car company, is not a this, is not a that. Interesting play applies to crypto, and that is networks.
Yeah.
And the truth of the matter is, we don't have widely accepted universal network valuation tools. It's a relatively new thing, right? This whole looking at things as networks.
Yeah, right? Kind of like you're talking like the on-chain metrics and stuff that, you know.
No, I'm talking about being able to think exponentially. Mm-hmm. Human beings don't do it well. It's most famously illustrated with the take an 8.5 by 11 piece of paper, folded in half 50 times. How big is it? You know, how big is it? If you don't know the answer, nobody says the right answer.
Yeah.
Right? Because in their mind, they think exponentially. They go fold it 50 times in half. It'll be about right here. Right in this one, Jerry. No, try from here to the sun. Here to the sun. Yeah. Huh? All right, here's another way to do it. You want to do something with your kids. You want to kind of train your kids a little bit, give them a little insight. Mm-hmm. Take a checkerboard or a chessboard and a monster bag of rice and teach them how to think exponentially. You take the first square, put 1 kernel of rice, and then double it.
And double it and double it. Yeah. Yeah.
And see how long it takes before you don't have enough room and you're going to need a lot more rice.
But like the thing about exponential curves is like eventually either they become bubbles where exponential growth happens and it hits a peak and it crashes, or exponential growth is an S curve, right? So you have this kind of ramping up, it hits peak kind of velocity, right? And then it curves off. And when it curves off, it completes its ubiquitousness. That's kind of how I see Bitcoin going, where it's like eventually there will be a maximum price to Bitcoin, and it will just eventually, if Bitcoin, best case scenario, it's the base asset that we denominate everything in. Maybe that's worth $300 trillion. It's never going to go to 600 trillion in like a year after that. It's going to grow at the rate of all assets.
It's going to be relative to the denominator.
Exactly. And then everything becomes relative.
So if it's denominated in Bitcoin, you may be onto something.
Yeah. But that's what I mean is like,
that would take the world though adopting Bitcoin as a denominator, not as an asset. Yeah. Denominated by some other entity, i.e. the Canadian dollar, US dollar, Australian dollar, et cetera, et cetera, et cetera.
I have a couple
Simon,
different.
Thank you.
Yeah. Oh, sweet.
Yeah, that was very nice. Got a little super sticker thing from Simon. You know what? There was another question Tesla is a stepping stone company for nuclear power grids. If you think the world's richest man really cares about humanity, slap yourself. No, I don't pretend to know what Elon's real true motivations are. However, there is something to be said about a company that is willing to really get down in R&D and tell me another company that puts as much R&D dollars to work other than Tesla.
Amazon puts a lot of R&D money to work.
But the same amount.
Tax write-off.
The same amount? I mean, but okay.
In comparison to their earnings? I don't know, but I know that Amazon
and
puts
then let's backtrack to that. What is Amazon? For years and years and years, because I remember I had my ear to this. For years and years and years, the smart guys on Wall Street said Amazon is a bubble. Amazon is wildly overvalued. It's a book company. No, Amazon is not a book company.
Yeah.
Amazon is the most sophisticated network of buyers and sellers on the planet and have branched out to create disintermediation for data storage. I mean, look at what, dude, they're building their own friggin' fleet of battery operated vans to do their own deliveries. Bye FedEx, bye the Brown, who's the Brown folks? United Parcel Post. Yeah, I mean, Amazon is not playing around, and what they realized is they've got a network.
Yeah.
Once you have a network, the ability this is all variable cost related, right? Variable cost related. The variable cost for them to create a service for you, as opposed to some other company starting up and trying to create that very same service, Amazon's variable cost is going to be lower because they're leveraging many other elements of their business model.
Yeah, well, they have that diversification. That's what I think Tesla tries to do. That's why they got the Bitcoin, I think. But yeah, I don't know.
I go to sleep on Tesla. I don't know how it'll manifest.
Oh, I'm not sleeping on Tesla. I own some now, but I wasn't gonna buy it on the way up. You know.
See, I won't buy anything that won't pay me to own it while I'm waiting for capital appreciation. That's a criteria of mine. It's a personal.
So you wouldn't invest in growth stocks?
I don't own anything that does not pay me a yield. Nothing. Zero. Nada. I won't buy a pair of tennis shoes unless it'll spit out a nickel once a week.
That's good. I like that.
I got that drilled into my head.
You should get a farm.
I am building a farm.
There we go. That's the ultimate form of yield, man. Like
food,
physically.
Good.
Food. And you have no reliance on anyone else. I don't know if you want to switch gears or that's kind of like what I did is
let's do it.
When Ethereum kind of topped out, I sold after it topped out. Crashed about 50% before I was like, okay, I'll take some money out. But I bought a piece of land. I don't know if you know Vancouver in Canada. That's where I'm from. It's one of the craziest housing markets ever, like more unaffordable now than New York and San Francisco, apparently. But there's a little island off the coast of Vancouver called Gambier Island, and it's maybe about 5 kilometers by boat. And the land there it's nothing. I got 5 acres for $174,000, and it's like houses in Vancouver, like a tear down house on a little tiny lot's $2.8 million. So people were just turning a blind eye to this island because there's no town there, there's no power and any of this stuff. It's kind of like an off grid thing, but it is close enough to the mainland that you get phone signal at least. So I put like a big chunk of my Ethereum money into that, and just like every weekend, especially this year, I've had it now for about 3 years. I've just been going out there. I built a cabin. Eventually, I want to build a farm on there. But the whole idea is like disconnect, don't rely on anyone else. Don't have any debt too, if you can. There's a time and a place to leverage debt, but like I own that thing out right now. Everything could crash to zero. I got a place to go, right? But
so what you need to learn how to do is be able to produce your own seed.
Yep.
In your own power. Solar's
I got solar out the wazoo out there already.
Okay, well, solar's good, but hydroelectric.
I have a little creek that runs through my place, but it's super tiny and it dries up in the summer. But yeah.
Okay.
The worst part about the solar is like dealing with batteries, because you either have to go with why can I
Deep
think of it?
acid, the acid.
Yeah,
cell,
lead acid, right? And then
acid.
those things, you gotta top them up, and if you're not there all the time, it's a nightmare. But I got lithium ion, but like, oh my god, they're so expensive. I have like a battery kit. I think it's like 4 kilowatt hour capacity. I think it was like $5,000. It's a lot of money.
Well, if you got a stream on your property, look into a very small do-it-yourself hydroelectric turbine, small, you know, something you could put in a 4-inch.
The creek is maybe like 4 inches deep. I'd have to build like a little dam off of it, I think, and then maybe.
Well, you need some fall, obviously.
Yeah, there's not enough fall. Yeah.
But the thing of it is if you get a lot of water in the winter, solar is going to be at its least effective in the winter,
especially up here. Yeah, it sucks.
And then, you know what I mean? So if you have two sources, one contrasting each other from a seasonality perspective, and you could literally do a DIY project, you could probably get a nice little hydroelectric thing if you can somehow create 60 pounds per square inch pressure.
Yeah,
you're cooking, and you can do that with fall and reduction.
Well, the other thing too, I was going to say is like in that area, the islands in the Howe Sound, so it gets these intense winter winds, and so I was thinking of getting a wind turbine as well.
Maybe
but you have to get a really good one, because they got like 100-kilometer-an-hour winds there in the winter. So normal turbines will just burn out when they get that for like an hour. Yeah. No, but it's cool. I get to learn about all these things on the side. That's how I balance all this. Is like you have this digital world where you're online all the time talking about investments and crypto, and it's just like I get to go out there and kind of disconnect from it all.
So do you follow your fellow Canadian Curtis Stone?
Curtis Stone? No.
You don't follow Curtis Stone on YouTube?
Oh my God, no. Curtis Stone. I know BTC Sessions.
Do you know Jean-Claude Veridin from the...
That sounds familiar.
Jean-Claude is up there in Canada. I follow Richard Perkins. He's obviously in one of those European countries like Sweden.
Curtis Stone. Okay, I thought Curtis Stone was like a crypto guy. So he's more like an urban farmer.
No, he's the urban farmer.
Oh, okay.
Great greenhouse technology. Great learning about stuff. See, before I got into crypto, I was on Hawaii, the big island of Hawaii, doing a tour on permaculture farms. Mm-hmm. So I studied in depth what they call vermicultures, the science of composting, using worms and grubs and things of that nature, aquaculture using fish, and then of course greenhouse, microgreens and things of that nature. And it was wonderful. I intend with my crypto proceeds to build a place that I can do my own farming, the corporation and trust that I'm going to start as a shelter will actually have a real business based in producing products like microgreens, my own homemade sauerkraut brand.
Ooh, that sounds good.
Yeah.
Yeah, the soil's amazing in Hawaii too, from what I hear. You don't have to worry about mold because you always got the breeze, depending where you are.
Well, everything's relative. Mold is a kind of bacteria. Yeah. Right. So if you have an antagonistic
mildew, it's what you don't have to worry about. Yeah.
You know what I mean? Mold is just bacteria. Mildew is the same thing. Mildew is just bacteria.
Yeah.
So if you have the right antagonist to that, it's not a problem. Just like inside your body. You know, a lot of the ailments that we go through are because our body chemistry isn't right. We're not utilizing the nutrition that we put in, or we're just putting in shitty nutrition. You know what I mean? But if you have more good bacteria than bad bacteria, you're wonderful. It's when you have more bad bacteria than good bacteria that things start getting weird. So
I actually used to own equity. I still own equity with the company. I haven't heard much from them, but in a company that, you ever heard of fulvic acid?
Fulvic acid or folic acid?
Fulvic, Fulvic.
No.
So there's this big movement of like how everything is connected to the gut, and basically like everything that we eat is degrading our natural gut flora. And so a lot of people have tried to move to, the organic movement because there's a lot more, fulvic acid in those fruits. It's just something that is part of the soil, right? But no, I was in this community with a lot of people that had IBS and leaky gut and like all the things that you suffer when you have those. And people started introducing fulvic acid. Like you can get this stuff in bulk. Sometimes they just sell fulvic acid as fertilizer for plants as well. But you can take this stuff and my God, people just reporting the amazing things from it, like IBS gone, taking this, never have like a bad bowel movement again, and full health, full proper sleeps and all this stuff. And it makes you realize like nutrition, so paramount. Really.
Absolutely. That's what I learned about when I started learning about and understanding bacteria. And then I realized how easy it was to create my own lactobacillus bacteria by creating my own sauerkraut, just by using cabbage. Now I flavor it up. I do I mince up some garlic and I'll shred some carrot. And every once in a while, I'll do a batch where I put in some cauliflower just because it's interesting.
Nice.
But that process of introducing extremely rich and dense bacteria into my stomach, I'm offsetting the bad bacteria with good bacteria. And if you believe that your stomach, your gut, is the center of or the epicenter of your immune system, then you want to take care of that.
Yeah.
Because that'll help take care of you. I believe I have two main beliefs. They're big beliefs, but here's one of them. The first one is that all the disease in the world, or most all of it, all the chronic ailments that the world is going through are 100% lifestyle choice stuff.
Yeah.
The way they don't exercise, the way you eat shitty, the modern environment that you choose to live your life in. Heirloom, he said fulvic acid, not folic acid.
Fulvic, Fulvic. And
so that's one big theme. The other big theme is, I believe, much of the unhappiness, strife, and discontent in the world is because the world isn't financially literate.
Yeah.
If the world understood the game of money, many more of us would have been much better playing the game of money.
Yeah.
And there would be far less income inequality because people would understand the game. Most people do not understand the game they're in.
No.
They don't. They're on, and Michael Saylor says it, on a road to serfdom. And it's because they were told, get an education, get a job, save money, buy a house.
Yeah.
Well, guess what? That recipe does not work anymore.
Well, no, there's no working to buy a house anymore. You have to own assets to get there. Like, not how many people are going to have, like, Vancouver's like a great case study for this. Like, you will not be able to afford a house unless you are making a family income of about $200K a year. That's what percentage of people in this city? Nil. And it's just like, you're going to have a whole city where almost nobody in the city can afford housing. I don't know where does that end? Like, what's the end game of this? I don't know. You can look through history maybe and find it. I've been trying to kind of study up on, Weimar Republic and things like that, where they have this hyperinflation and no one can afford anything. And I'm still trying to find parallels to kind of figure out, like, where could this possibly go? Are we just going to have to move to UBI? And I was thinking, like, one of the trends I've really noticed is all of these companies now, like it's kind of like private companies now, because governments have been unable to control these things, feel that they need to take care of their workers more. I got a buddy who works at Shopify, and for example, they take care of health insurance. They give you stipends for going to the gym. They give you stipends for your desk, money for furniture. They give you discounts so that you can get food delivered. And I was thinking, in the future, I don't see it that crazy that Amazon will be in town and they'll have Amazon apartments. So the workers, if they want to forfeit a little small chunk, they'll be able to get affordable housing provided through Amazon, and they'll work. And I see this all expanding to the point where companies will basically just, like, if you're in the lower class, like, your life will be the company. They'll own your house, they'll own your car, they'll take care of your food, they'll do everything for you as you need it. So you don't have to go out and make those independent choices.
They need and want. Right.
Yeah, exactly.
Which is serfdom.
It is. It's pretty crazy to think about. Yeah.
You're right. The road out of that weirdness is own assets.
Yeah, here we go. You will own nothing and rent everything.
Yes.
Yeah.
And
exactly.
that will be true.
Or I think it was I think it was, what was it, like one of the organizations, like the global bank, it said you will own nothing and you will be happy. It's like, okay.
I don't think so. So, Julian, hey, right on, stopping by BZ. Also my buddy Phil from Australia is checking in. Nice to see you. I know some folks popped in, like Jeffrey. I'm sorry if I didn't say hello. Simon, obviously, you know I adore you, and thanks so much for that super chat thing. Here's a question. Kathleen asked me to like Puna. You know, I lived in Hilo and visited Puna, went out to the coast many times, went out and saw the actual lava flow. I was there in into 2015 when the highway got covered by the volcano, the lava. That was interesting. But yes, I love that side of the island. Hilo, Puna, all that was wonderful. I love rain. And if you like rain, Hilo, Hawaii is your place. There is no shortage of rain in Hilo, Hawaii. All right, Brady, let's get you ready. I do this thing at the end, Julian, where I do last final thoughts. And so I always bring in my producer, Brady, for that. But I want to give you the first opportunity to do final thoughts. Your thoughts on the show, your thoughts on the world, your thoughts on your favorite digital asset this week, just maybe your thoughts on what you're going with your channel, and make sure we plug Kinetic Finance, folks.
I appreciate it.
Kinetic Finance.
All right. Final thoughts. Well, I consider myself an optimist. I try not to be pessimistic. This is one of the things that I think is a big challenge for the Bitcoin community. I think a lot of their belief in the currency is based around pessimism, that everything has to crumble in order for Bitcoin to reach its full potential. Everyone has to have a come to God moment where they realize this whole system's broken and then Bitcoin takes over. I think there's different routes to get there. I think we can adopt it, and I'd hope we can adopt it without bloodshed and violence. But we know as, currencies and paradigm shifts happen, there's a lot of, destruction in the process. I try and look at it, I try and be pragmatic about it, but my main goal is I want to just introduce the concept of Bitcoin, of sound money, to as many people as possible. My outlet is trying to make it as entertaining and kind of quick as possible. I know my generation doesn't have much of an attention span, but to bring these ideas to people is really what brings me joy. I for a while, it was about the pursuit of money and investing and, getting as many dollars through this or that. I'm really big into trading. I do a lot of trading myself, technical analysis, but, and my business too, running pretty well, but I've actually forgone all of that stuff. And I just want to deliver this message to people of sound money and understanding, the ability to take care of themselves and farming. And so that's really what I want my channel to be about going forward. But it's like the opposite for me of all this, own nothing, rent everything. I think owning things is the only way to real freedom. And I want to spread that message to as many people as possible. And instead of people being pessimistic about, I got to work here and I'll never be able to afford anything, introduce them to concepts like Bitcoin where they can own something real as much as $1 a day into it, right?
Yeah.
So yeah, optimism is my message. Own things, own hard assets, and be a independent thinker.
Well, that was very eloquent, Julian. Thank you so very much, and I hope that you will consider coming back at some point in the future.
I would love to.
Enjoyed this conversation, and
I would love to. This was fantastic. Thanks so much for having me on. I got to catch up with all your content. I know you've been watching mine.
Yeah, I got a little. My channel was sprung doing interviews.
Oh, so, that's great.
I have not been able to land Michael Saylor, but I've got a bunch of the Real Vision folks have come onto my channel. Famous authors like Jeff Booth. I've got even some YouTubers, some big YouTubers, guys like George Gammon and Emil Kolonowski. A couple of these finance guys. It's been fun. This YouTube live stream show, though, is all that I'm really putting my energy now, because my Patreon group has gotten so large that I'm doing 20, 25 hours a week just in one-on-ones with my own patrons. So it's
I think the challenge that I'm having with this whole thing is like I still consider myself pretty introverted and like I've just tried to commit to like one video a week produced, but just like getting in front of the camera is so difficult. I feel like this live stream format, you kind of just you turn it on, you don't think about like how you look and all this stuff. Like I'll admit it, in my videos, I put a makeup under my eyes because I have pretty baggy eyes from staying up all night. But you know, just stuff like that. Like it's so hard to put out weekly content, and I'm really trying to get better at that. So if you have any advice on that, just like getting on and
go check out his channel, folks. Yes, he's in the stock market. He says 15% of his net worth is still in traditional.
Wow, you remember that? That's awesome.
Well, I listen. I have no choice. Ray, thank you so much for the super sticker, young man. It's muchly appreciated. And Mario, we're gonna. This is what happens when there's multiple ofs. This is off topic, but I'm new to the crypto world. I'm very curious in what you know about staking. I love staking. I want to earn yield on my assets.
Yeah.
So Mario, that's my whole thing. I don't own one single crypto that does not pay me to own it.
Here's a question. Do you know about Ethereum 2.0? Would you stake in that? Because that's something where you can't pull it out.
I kind of did. I got 2 Ethereum sitting in the 2.0 contract. So
nice.
I'm Ethereum for life.
See, I didn't have the balls to do that because I've seen it. I've seen it with Ethereum where it's just like they take years and years, and I'm like, I don't want to be stuck for 3-4 years. They say, oh, we'll unlock in 2 years. Like, yeah.
I wasn't thinking when I did it.
Yeah. So do they pay you the yield after they unlock it, or is it like
no, I'm getting the yield now.
Oh, that's good.
Yeah, I get the yield now, but the two Ethereum is locked.
That's stuck in there, yeah.
I did it through Kraken, and because that's where all my and Cosmos is, I just and they were advertising 5 to 17%.
Wow, that's pretty good.
But it's actually 5 to 7%.
Yeah.
Not 17%. If I could have got 17% on my ETH, then I don't care. Give me 17% till I die. If I don't care if 2.0 never happened. Ethereum is such a large ecosystem.
It is.
That it ain't going anywhere. It may not be the dominant one in 10 years, but it's absolutely the dominant smart contract platform today.
Yeah.
So we'll see. All right, let me see. I got Brady in the house. Brady. Chime in. Okay.
Yes.
Julian, I'm going to put you backstage. You're free to stay and hang out for a minute after the show. But if you got to go, then that's cool too. But we'll see you in a minute or see you next time. Brady.
Yes, sir.
Extraordinaire. Your thoughts on tonight's show? What do you think?
Thoughts are cash flow. A friend of mine always reminds me of the expression, cash is king. And now I actually kind of have a good comeback for him because now I understand the concept of money a little better and how it works through time. So now my theory is cash is king, but cash flow rules, because if you don't have cash flow, then you're kind of, or at least if you can't control your cash flow, then you're kind of, I guess, heading towards serfdom. I think the percentage or on average, a millionaire has about 7 streams of income, I think is the whatever the metric. So sure, we think of investing and trying to take profits off of what we invest and reinvest it. But if we also look at ways to source or find scalable cash flows, that's almost as good as staking, but since staking kind of just set it and forget it and you don't have to do anything about it, I'd still think is much better. But that's why we're looking to collect more of these assets so that we can stake more to get more sooner, faster, and to infinity and beyond.
Well, you got a point. At some point you can flip a switch and take what you're staking or yield that you're earning and no longer compound it into your principal, or just take a percentage of it and turn it into an actual cash, what we would call a passive income stream that is actually sending money to you in the form of income well, you're generating it as income. You're going to be taxed on it as income.
Right.
Might
Right.
well realize some of it as spendable cash or deployable in some other form.
Right. Yeah. Yeah. And understanding how all the streams get to you is certainly something that we've never really had to think about before, because it was always, oh, you accept the native currency. But now it's like, well, since we're on the internet, does everyone want to accept dollars, or do we want to accept other things? So it'll be interesting to see how many other people accept crypto as form of payment versus our usual familiar paper monies.
Well, I think the world will decide what it likes. Currently, right now, if you look at the standard, here's the standard. Although the United States is only 25% of global trade, right, as far as goods and services going back and forth and around the world, they're 80% of all settlement.
Right.
The US dollar is 80% of all settlement for every exchange of value on the planet. At some point, the world might go, we'd rather use the euro, or hey, that digital yen's looking pretty good. If you're in Asia, who knows? But the market and the world will decide, and I guarantee it will be digital. I guarantee it will be digital.
Well, I think the dollar could be seen as the unit of exchange, whereas something else could be the dollar could be the unit of exchange and account. But then the store of value, I guess, is market determined, or.
Well, for years it was things like gold.
Yeah.
And other precious commodities. Bitcoin is threw its hat in the ring, and we'll see what kind of lion's share digital assets will take going forward. Right.
Yep.
Right on. So Brady,
Indeedy.
Great show tonight, man. Thank you for manning the ones and twos, and we'll see you backstage in just a minute.
All right, cool.
Folks, thank you so much for tuning in tonight. It's always an honor to me and a privilege, actually, to be able to present something to you. And I thought Julian was a wonderful guest to have on tonight. I hope that you guys take the time to check out Kinetic Finance. I think he's doing a really good job. His production quality is wonderful, and he's a real engaging young man. I'm kind of encouraged for the youth of the world, if they're, breaking the mold, so to speak, and learning about things that will better themselves in their communities that they make themselves a part of. And the little tidbits that we talked about, as far as him starting to learn and understand and put into practice things like home sovereignty, food sovereignty, energy sovereignty, and of course, financial sovereignty. These are important topics, ones that actually lend themselves to freedoms that are going to be harder and harder for the masses to get. We truly are a lucky few. And I feel beholden to try to spread the message, just like I know many of you are. I want to thank all of you for tuning in, whether it was from YouTube, Facebook, Periscope, and for all of my Patreons that continue to support my YouTube channel and all the things that we're doing in the Beyond Moon Investment Club. Thank you so very much. And until next time, folks, I hope that today you've learned something so that you're a better investor than you were yesterday. Let's just keep that rolling day after day. Till next time, everybody. Pura vida.